piece. Jupiter Wagons stock up more than 10%. Tourism Finance up close to around 10%. Union Bank was the result of the day. That stock was up close to around 7.5%. So big move out there. Purvankara, they came out with their operational update. The street liked that. That was up 6.5%. And Vedanta, what a beautiful looking stock. Out of nowhere, that stock has come back to life. In the last 6 months, it's up close to around 50%. And if you want to play the commodity theme, well, you have to keep in mind what the promoter could do next. But at least in terms of returns, it's been pretty good. And they've been making the right moves of late. Nalco was another stock that continued to move up, as well was the case with Hindustan Copper. Net, it was a soft trading session yet again. The Nifty appears to be on a bit of a sticky wicket, and we're in that 500-point range. But the good news today was the mid-cap index. That was up close to around 0.3%, which could tell you why your portfolio would be looking a little bit better. We'll wrap up on this edition of Closing Bell, but Markets Forward comes up next. Stay tuned.
Markets end in the red after a volatile session, with the Nifty slipping below 25,700. Mid-caps outperformed to close in the green. Metal stocks extend their rally for a third straight day.
Tata Elxsi shares fall despite a decent set of numbers. Motilal Oswal reiterates its sell rating on the stock with a price target of 4,700 rupees a share. This implies a potential downside of around 19% from current levels.
India's Foreign Minister Jaishankar dials US Secretary of State Rubio. Both leaders discuss India-US trade deal negotiations amidst Trump's threat to impose 25% tariff on Iran's trade partners. Rubio also welcomed India's new bill, which allows foreign investment in India's nuclear sector.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day. I'm Sonal Bhutra, with me, my colleague Ekta Batra. Ekta, good afternoon. It's been a very volatile trade today. We did see Nifty briefly come into the green around 70 points higher, and now finally we ended around 60 points lower on the Nifty, below that 25,700 mark. Yes, the mid-caps did outperform, but if you look at the advanced decline ratio, it was in favor of declines, and it's been quite volatile across the board. Metals continued to surge, 2.7% higher on that index. IT was under pressure, but there was some surge on Infosys in last couple of minutes. So that stock continues to be on our radar. PSU banks did well, but really that is one space that continues to be a laggard.
Hi, Sonal. Yes, absolutely. It was a bit of a mixed day, you'd have to say, by the close of trade. A bit choppy, you'd have to say, because we did give up, a lot of the gains that we saw for the markets on an intraday basis. For the Nifty, we closed up with a close of around 66 points lower. We had the broader markets, which did do better in today's trading session. So that was a bit of a ray of hope. We had the mid-cap index, which ended with gains of around 0.3%. Metals, PSU banks were really the stars in today's trading session. But nonetheless, let's tell you what we have lined up for you in store today on Markets Forward. We'll start with the top movers and shakers of the day with Vivek. We'll get you a slew of earnings report cards, including Tata Elxsi and ICICI Lombard, and we'll discuss why metal play stocks were up in trade. Last but not least, we delve into the key market events to watch out for in Friday's trading session, you'd have to say. But let's get on to our first segment of the day. We have Vivek Iyer joining in from the big wall with all of the top movers and shakers of the day. Vivek, over to you.
Well, thank you so much for that. Despite the headline index actually being down and ending the session marginally lower, the advanced decline ratio in the broader end of the markets was much better given the outperformance that you saw in the mid-cap and small-cap end of the markets. Well, in terms of individual sector stocks that we are tracking, you can't look past the metal space. Most of the metal stocks did very well in the session. Vedanta, Tata Steel, Hindustan Copper, all of them higher by over 4.5%. On the other hand, standalone refiners, MRPL gave its results towards the end of the trading session. That particular stock ended higher by 10%, and also Chennai Petro ended higher on very good volumes today, over 6%. HDFC AMC was the other stock in focus, came out with its results, a marginal uptick as far as market share is concerned in the equity AUM segment. On the back of that, over 2.5% higher for HDFC AMC. The entire capital marketplace, most of these names are after a period of multiple days of volatility. Today, most of them ended higher. Angel went on the back of a Citi initiating coverage report, MCX, KFintech, all of them sharply higher in the session. Along with that, proxies to the entire metal trade, so names like HEG, Graphite India, Rain Industries, all of them ended higher. And post the results of Union Bank, most of the PSU stocks are, especially in the second half of the trading session, perked up significantly. So Union Bank, you did see Bank of India, Indian Bank, all of them move higher quite sharply, especially in the second half. Not too many laggards today, but quite a few in terms of individual stocks. Tata Elxsi, profit booking coming despite what was essentially a very strong quarter. ICICI Lombard, elevated combined ratio is something that the street didn't like. Polycab, you saw last trade happen over there, post which the stock continued. Its fall ended low by over 3%. And lastly, FMCG stocks on the back of worries of rising input costs. Most of these names saw a little bit of profit booking, HL amongst the key drags.
Okay, some interesting names there, Vivek. Thank you so much for joining us with those updates. Let's get stock specific now. Shares of Tata Elxsi fell nearly 5% despite reporting steady set of numbers in the third quarter. Margins expanded even as profits fell on one-time labor code impact. Rima joins us to decode the numbers, the valuations, and a lot more. Rima.
Well, nothing per se went wrong in the Q3 numbers, but Tata Elxsi continues to trade at very high valuations. The valuations for the company are 43, 45 times, which is at a premium to peers like a KPIT Tech or a Tata Tech. And plus, remember last week when JP Morgan upgraded Tata Elxsi to a buy, the stock had rallied. So prior to the numbers, the stock was already up 10% on a year-to-date basis. So Q3 numbers are fine, but analysts point out that premium valuations keep gains in check, and today you are seeing some profit booking. In fact, Bloomberg shows that 18 analysts track Tata Elxsi. 12 of them have a sell call, 4 of them hold, and only 2 of them have a buy call. And if you just aggregate the average target price, it is about a 9% lower than where the stock currently is. One question everyone always asks is what's the difference between a Tata Elxsi and a KPIT Tech, because we're comparing the valuations. Well, KPIT Tech gets 100% of its revenues from the automotive tech spends. Well, for Tata Elxsi, as of Q3, about 56%. And this quarter, we saw auto doing well. So automotive segment, which is 56% of Tata Elxsi's overall revenue, went up by more than 7%, nearly 7.5%, 8%. But the other 2 segments were a bit of a drag, healthcare as well as media. So these numbers and the strength in the automotive business has a positive rub-off impact on KPIT Tech too. But for Tata Elxsi, numbers are fine, Q3. It's just the valuation multiples are at a premium.
Okay, all right, Reema. Thanks very much for that. So that was on Tata Elxsi, which fell despite what was a steady quarter. We have our guests with us this evening. We have Mayuresh Joshi joining in on the fundamentals and Jay Thakkar from ICICI Securities joining on the technicals. Mayuresh as well as Jay, welcome to the show. Mayuresh, I'm going to toss it to you. We were just talking about Tata Elxsi. Did you look at that stock at all in terms of the numbers that they reported?
Afternoon, Ekta. No, decent set of numbers. But again, I think the valuation mismatch is not playing out in terms of prices because what the street really expects and believes is a much higher growth rate, which probably seems to be a little bit on the softer side. A traditionally weak quarter, expectations in terms of how discretionary spending budgets will get decided in Q4 will be a determining factor as well. So again, based on how valuations are played out and our own core EPS ratings, which seem to be a little bit poor. Our sense is that numbers and valuations both might have played its part in terms of price. Let's not forget, Ekta, that the new labor code will also have its implications. There will be a one-time impact in the December quarters based on the new labor code, both in terms of gratuity, leave encashments, etc., which will have some element of hit across IT companies as a pack and some nominal hit going forward as well as wages get reset in the coming few quarters. So I think the sector has to comprehend with a lot of news, results and commentaries as we speak.
Oh yes, a lot of moving parts. Mayuresh, take that point. But Jay, coming to you, because Nifty IT was under pressure, we do have Infosys's numbers which are expected. And ahead of the numbers, we saw a sharp surge towards the end of the trading session as well. Where do you think there's some strength? Is it the larger cap or is it the mid caps?
Hi, good afternoon to you, Suman and Reema. Well, I would say that, the overall IT pack is quite mixed. And in November and December series, we saw that most of the stocks bounced back from quite an oversold territory. And we saw the Nifty IT index bouncing back from 34,000 approximately to, 40,000 almost. And we saw that 20-25% kind of a jump in the IT index for most of the stocks, performed quite well. We have seen that, Sonal, the mid-cap names have relatively outperformed the large-cap names within the IT pack, and the shorts have been within the large-cap names only. So maybe Wipro, TCS, Infi, or HCL Tech. I mean, we have seen the shorts in most of the large caps, but exceptionally less in, HCL Tech, which has been an outperformer within the large-cap IT names. So Infosys, as far as that is concerned, I mean, that is one stock within the large cap or the entire IT pack, I would say, Sonal, which has the highest shorts. So if at all the stock is able to take off its critical level of 1650 to 1700 levels, post its results, if at all they are exceptionally well, then you could see a sharp short covering coming in this stock, and it can overall change the short-term outlook in the Nifty IT from sideways negative to possibly positive, wherein Nifty IT can inch towards 40,000 as well. But failing to surpass 1660, 1700 levels, I fear that this stock can thereafter further correct until 1450 to 1500 levels on an immediate basis. The overall data, F&O data, is relatively negative as compared to the other IT names.
Okay, all right. Thank you so much, Jay, for that opinion. But let's talk about the next stock. ICICI Lombard came under pressure after reporting operationally weak numbers in the third quarter. Underwriting losses and expenses grew in the quarter ending December. Yash joins in with more details on this one. Yash, how did the numbers look?
Well, the numbers looked weak, certainly, and that reflected in the stock price today as well. As far as the premium growth is concerned, that was decent, growing at about 13% on a year-on-year basis. This is the net earned premium for ICICI Lombard. But to really chase that modest premium growth, the underwriting performance really deteriorated. So as far as the underwriting loss is concerned, that shot up about 132% or about 1.32 times. The operating profit declined by about 17% and the PAT fell by about 9%. The PAT fall of 9% was despite a growth in investment income of about 42%. As far as a result of the weak underperformance in the operational performance is concerned, the combined ratio that increased to about 104.5 as compared to 102.7. Two major segments for the company, motor and health, both saw a decent premium growth, but underwriting losses shot up. Motor, the underwriting loss there shot up by about 137%. Health, the underwriting loss shot up by about 134%. It was because of these two segments largely which contributed to the overall increase in the underwriting losses for the company. The weak performance in the quarter reflecting in the stock today.
Okay, all right, absolutely. ICICI Lombard weak in today's trading session, but not the case for Union Bank, which in fact hit a fresh 52-week high after it reported what was a strong set of numbers in the third quarter. Net profit rose 9%, while asset quality continued to improve. Gaurav is here with the report card on the performance of Union Bank.
Well, if you look at RBL Bank, they have actually cut their peak savings account deposit rate almost by 50 basis points from 6.5% to 6%. Now, this is applicable for the deposits which will be under category of 25 lakhs to 3 crores. If you look at the overall implication of this, savings account contribute almost 17% of their total deposit, and at the same time, analysts believe that this can actually improve, this can actually lead to 3 basis point improvement in net interest margins, and at the same time 3% growth in earnings as well. Apart from that, analysts are also a bit bullish on the fact that we may see further savings account rate cuts, and there are two reasons for that. First is that they believe that the
Okay, all right. Well, we'll get back to Gaurav with regards to Union Bank. But Mayuresh, just wanted your thoughts on Union Bank. Very good set of numbers. Asset quality seems stable. Stock went to a fresh 52-week high. Really adding to the momentum that we're seeing in PSU banks.
Oh, absolutely. Good afternoon to you. I think PSU Bank's on a steamroll as we speak. And therefore, I think numbers, and they had given a business update a few days back. So advances deposit growth was pretty nominal as we speak. But I think the core numbers in terms of spreads, the net interest margins, the provision coverage, and a lot of commentaries which are now surrounding the base case scenario for PSU banks is that deposit growth should be reasonable enough, which means that the credit deposit ratios should inch higher as we head into the next few quarters, with recoveries being extremely strong for a whole host of these banks. I think that does add to the bottom line as well. With NIM stability, expectation of ROA and ROE expansion, and inexpensive valuations compared to the large cap peers, when it specifically comes to the private banks, I think they probably seem to be one space where the momentum can still exist.
Okay, all right. Take that point, Mayuresh. We have a lot more news and stocks to discuss, so we'll slip into a short break, but don't go anywhere. We'll get you more D-Street movers on the other side. Welcome back. You're still tuned into Markets Forward. A lot of stocks in the broader market which were buzzing. Puravankara is one of them. Now, do remember, Nifty Realty Index has been under pressure of late because of some demand concerns. But Puravankara reported its Q3 business update, on the back of which the stock surged. It was a good set in Q3. We did see an improvement in pre-sales on a YY and on a quarter-on-quarter basis. Those graphics will come up for you on the screen as well. Even in terms of volumes, there was a decline on a sequential basis in terms of volumes. However, 4% increase on a YY basis. Even the collections were quite strong, up 22% on a YY basis as well. If we talk about their launch pipeline and the units delivered, it is very important for a company to just not book but deliver those units as well. And the company has given those numbers. They've been able to deliver 1,414 units in the quarter gone by, and the total saleable area launched was at around 2.83 million square feet, after which a lot of new launches also came by, 2.03 million square feet. It's a good going, especially at a time where we've been talking about some demand concerns. But yes, Puravankara was bucking the trend today, and that's exactly why the stock was higher in trade. Jay, let me come to you from a charts perspective. Do you think the realty index or some of these real estate stocks are oversold now?
Well, I don't think so, Sonal. Although, yes, I agree with you that, there has been a lot of shorts in Nifty Realty. I mean, that is one of the sector, which has been hard hit, and we have seen a lot of shorts getting built up there in majority of the realty names. It's apart from Phoenix, of, selective names like Prestige and Oberoi. I mean, wherein we don't have much of the shorts. Rather, Phoenix has seen good long build-up and has been an outperformer within the Nifty Realty pack. Else, those names which are there within the F&O names, apart from, Phoenix or Oberoi, have seen a good amount of short build-up. Hence, the overall outlook for the Nifty Realty is negative, and the sector has been underperforming. So, overall outlook still in Nifty Realty is not much bullish. I would say it will be very stock specific. If someone is really looking out for building longs out here, then it would be Oberoi or maybe Prestige and Phoenix. But as far as Puravankara is concerned, which is a non-F&O name, I would say, Sonal, that the stock has a critical support around the levels of 200, which was a critical resistance for years. And beyond 200, I think till the stock manages to hold out, the overall medium to long-term perspective here would be positive.
Okay, all right, fair enough. But Jay, what are your thoughts on a couple of these banking stocks? For example, IndusInd was your top gainer today within the Nifty space. It was up 3.7%. Anything on the charts that you would recommend?
I think, yes, Ekta, that overall, if you see that within the banking pack is the PSU banking stocks, which are actually stealing the overall show, and which is actually, in fact, helping the Nifty bank to, in fact, hold the 59,000 critical level as well. So Nifty closed below 25,700, wherein it was managing to hold out those levels for a couple of trading sessions. But Bank Nifty has not closed below 59,000, and thanks to the overall positive momentum that's there in the PSU banking names. So I would say that, these banks are still expected to outperform. Private sector banks are still looking to be, consolidating at this point of time. And HDFC Bank, we have seen the way it has broken 950 levels, I mean, which was a critical support. So out there within the private sector names, I'm not much bullish, as relatively bullish in a PSU banking name may be, SBI, Bank of India. SBI still looks positive until the levels of 1100. So I think one can prefer those names: SBI, Bank of India, maybe Union Bank on dips, Canara Bank, Bob. All of these names, Ekta, I would say, are relatively looking still better, and I think the momentum out here is still likely to continue.
Okay. All right, take that point, but let's talk about the other buzzing space. Metal stocks such as Hindustan Zinc and Hindustan Copper surged in tandem with rising metal prices. Even precious metals like gold and silver touched fresh all-time highs, buoyed by expectations of a Fed rate cut and heightened global uncertainties. Manisha joins us now. Manisha, seems like there's no end to this bull run now.
Oh, absolutely. Yet another day when we're looking at all metals continue to surge higher, whether it's gold, which has hit an all-time highs. We've seen gold prices gain up by 65% in the previous year. They're up by 5% in this year already. But the outperformance clearly continues in case of silver. All-time highs, and not just that, $91 an ounce, and now has been taken after 150% gains in the previous year. Silver is up by 26% in this year already. So very, very strong going for that one as well. It has to do with the decline in dollar index, the geopolitical tensions, weak US data insisting that you could be looking at rate cuts continuing into 2026 as well. And then, of course, geopolitics and safe haven go hand in hand, supporting gold and silver, both those prices. But the list continues, because when you look at the copper prices, we are trading at an all-time high there as well in the US markets, in UK markets, Shanghai and India as well. For copper, it is about constant decline in inventories, very strong demand expectations from EVs, renewables, AI, etc. And the markets do believe that copper could continue to outperform in the months to come. Aluminum is trading at a 3-year highs. You have zinc trading at a 1-year highs as well. Tin is trading at a 3-year highs. Platinum prices have gained up by 20% in this year already. So when it comes to metals, whether it is about deficits, strong demand estimates, weaker supply, mining issues, geopolitics, buying into tangible commodities, almost all of those factors seem to be working in for all of these commodities.
Okay, all right. Yes, absolutely. Metals was really the big stock of the day. Mayuresh, your thoughts? Would you be a buyer at these levels, or do you think that there's some caution warranted now?
I think base metals have done their part, Ekta, to a large extent. But I think steel stocks, ferrous stocks, might actually have a say, in our opinion, based on rating rankings, the way we are looking at how the sector itself is poised from an earnings point of view. The safeguard duties that have got announced will definitely abet the kind of earnings realizations that a lot of these ferrous companies will have. A lot of them have backward integration operations with input costs remaining lower. The expectation is that EBITDA and EBITDA per ton should show signs of improvement. And therefore, our take is that steel companies, after what we've probably seen in copper, zinc, aluminium, should follow as far as the metals packs is concerned.
Yeah, all right, Mayuresh and Jay, thank you so much for joining us with your insights and analysis on some of these names. But with that, it's a wrap on this edition of Markets Forward. We leave you with the sound bites of what veteran investors Ramdev Agrawal and Manish Chakani had to say about the Indian markets in 2026. Thank you for watching.
My sense is Q4 will be even better. So I'm very kind of optimistic on the earnings cycle turning up after brief lull for last 4-5 quarters. I think PSUs still have a lot of steam. They are much more reasonably valued than private sector, and earnings growth is almost 2x of private sector. So that looks to be a very interesting category. And I think financials, I think auto will be the star of the year.
The resource raising exercise has to come now from public sector. And if some of those assets go cheap to private hands, like it started in 2002-03 in Vajpayee era, it reignites animal spirits, because private sector is clearly not opening the purse strings because they are a bit uncertain about what's happening in the world as well. So anything to revive animal spirits, whether through privatization or disinvestment or maybe some other PLI type scheme, would be very welcome.